Welcome back to Explain the Charts, your go-to source for in-depth market analysis. Today, September 11th, 2025, we're focusing on Intel Corporation, ticker symbol Intel, which has seen some notable activity recently. According to our latest Google search, Intel is currently trading around $24.678, showing a slight dip of 0.37% today, following a strong close yesterday. Zacks Investment Research and Finviz reported just one day ago that Intel lapped the stock market with a plus 1.35% move, outperforming the S&P 500. This recent positive sentiment correlates with an article from Investing Snacks titled Intel's Surprising Surge, A New Dawn, suggesting a potential turnaround for the tech giant. The article highlights substantial U.S. government support aimed at rejuvenating the semiconductor manufacturing sector, along with the appointment of a new CEO, as key catalysts. While Intel stock has lost over half its market value in the last 5 years, these new developments are sparking optimism for a robust recovery, presenting it as a potentially lucrative contrarian bet. However, analysts' consensus EPS estimate for Intel has seen a slight decrease of 2.22% over the last 30 days, a factor worth noting. Valuation metrics also show a forward P/E ratio of 168.55 and a P/G ratio of 23.61, both significantly higher than the industry averages, suggesting a premium despite its past struggles. Now, let's turn our attention to the charts to see how these news events translate into price action. Looking at the one-day chart, encompassing a period from late April 2024 to the current day, we can clearly see the long-term downtrend Intel has been navigating. Notice the sharp decline in early August 2024, where the price plummeted from around $29 to lows near $19, indicating a significant bearish event, possibly related to earnings or a major news release. This period saw extremely high volume, confirming strong selling pressure. However, there's a visible reversal starting from the lows of around $18 to $19, forming a base in late 2024 and early 2025. The 52-week low of $17.665 per our Google search acted as a strong long-term support level. A prominent bullish move occurred in mid-February 2025, marked by a massive green candle on February 18th, showing an impressive 11.34% gain with very high volume. This surge likely corresponds with the new AI products news, such as the Xeon 6 CPU and Gaudi 3 AI accelerator, which, although reported in 2024, could have gained traction or had significant updates around that time, signaling Intel's push into the critical AI market. Since that peak near $27.55, which now stands as a key resistance level and the 52-week high, Intel has experienced a gradual pullback. Despite this, recent days in September 2025, particularly the September 4th candle, show renewed buying interest with a plus 3.19% gain, aligning with the recent surprising surge news. The September 10th candle also closed positively at $24.77, reflecting the lapse the market sentiment reported by Zacks, with today's price just slightly below that level. This suggests that the $23.50 to $24 range has recently emerged as an important short-term support zone. Let's zoom into the one-hour chart to examine the short-term price action and confirm these recent movements. Here we observe the price consolidate around the $23.50 to $24 level in late August. A notable push higher is visible on August 22nd, when the price jumped from roughly $23.50 to above $25 within a few hours, showcasing significant buying momentum. This upward movement was accompanied by increased volume, suggesting conviction behind the rally. The stock then pulled back and found resistance around the $24.90 to $25 mark throughout late August, indicating a ceiling for short-term bullish advances. Moving closer to the present, let's look at the intraday movements leading up to yesterday's strong close. Now, switching to the 15-minute chart for an even finer detail, we can clearly see the sharp upward spikes that contributed to the daily gains reported. Specifically, observe the period from September 9th to September 10th, from 12 Universal Time Coordinated to 2000 hours Universal Time Coordinated. On September 9th, around 1328 Universal Time Coordinated, we see a significant green candle pushing the price from $24.54 to $24.805 on high volume, indicating strong demand at that specific time. A similar, even more pronounced spike occurred on September 10th, also around 1328 Universal Time Coordinated, where the price surged from $24.41 to $24.81. These intraday rallies align perfectly with the news of Intel, lapping the market and the surprising surge, suggesting that these gains were driven by intense buying activity, likely at the market open. However, following these sharp increases, the price tends to retrace partially, indicating short-term profit-taking or supply at higher levels, with the $24.80 to $24.90 area acting as immediate resistance. Now, let's tie everything together and discuss the short-term and long-term outlook for Intel. From a bullish perspective, the recent positive news of government support, new leadership, and AI product development are strong fundamental tailwinds. The bounce from the long-term support around $18 to $19 and the sustained buying interest in early September suggest that the market is beginning to price in a potential turnaround. Short-term, if Intel can decisively break through the immediate resistance around $24.90 to $25, we could see a push towards the midterm resistance of $25.50 to $26 with a medium likelihood of 60%. However, from a bearish viewpoint, the high valuation metrics, PE and PG ratios, signal that the stock might be overextended relative to its near-term earnings potential, making it vulnerable to profit-taking. The declining Zacks EPS estimate and the ongoing fierce competition from NVIDIA and AMD are also concerns. If Intel fails to hold the $24.30 to $24.40 short-term support, a retest of the $23.50 to $23.80 level is possible with a medium likelihood of 50%. Long-term, the success of Intel's turnaround strategy and its ability to innovate and streamline operations with government backing will be crucial. If these efforts bear fruit, a sustained climb towards the 52-week high of $27.55 is achievable, though this has a lower likelihood of 40% in the immediate future. Conversely, a failure to demonstrate tangible progress in its chip fabrication business could see the stock retesting its long-term support around $19 to $20, which has a low likelihood of 20% in the short term but could increase if major negative catalysts emerge. Traders should look for consistent closes above the $25 level on the daily chart as a bullish confirmation, ideally supported by increasing volume. Conversely, sustained closes below $24 would indicate a loss of recent momentum. Keep an eye on upcoming earnings disclosures, as analysts project $0 EPS for the next quarter, representing a 100% year-over-year increase, but revenue is expected to decrease slightly by 1.26%. Positive surprises in these reports, or further clarity on government support and AI market penetration, would significantly reinforce a bullish outlook.